Hi, it's Sir Rob. Today I am going to talk about designing and creating financial reports using MS Word. The theme of this chapter is a technical guide to producing professional financial reports with integrated narrative in MS Word. We will be looking into the financial reporting requirements for listed, non-listed reporting, and private corporations under the Philippine Securities and Exchange Commission, or SEC, pursuant to the Securities Regulation Code, Rule 68, Philippine Financial Reporting Standards, or PFRS, and the Revised Corporation Code, or RCC. Then, we will discuss how professionals, and hopefully you too, through the hands-on activities, can use MS Word to design and create impactful, professional quality financial reports. As always, in the practice of accountancy, we should remember to be professional, perform effectively and efficiently, follow standards, and document our work adequately and properly. Topics in this discussion include 1. Annual reporting requirements. 2. The strategic mandate, anatomy of the professional financial narrative. 3. Crafting the story, principles of data-driven financial storytelling. 4. Architecting the report in MS Word. Advanced document engineering. 5. Seamless data integration, linking Excel visualizations and maintaining accuracy. And lastly, 6. Finalizing and compliance, presentation standards and review. And off to our first topic. Annual reporting requirements. The annual reporting requirement plays a vital role in financial transparency, accountability, and good governance. It is the legal obligation of corporations and other business entities to submit a complete and accurate report of their financial performance, operations, and governance for a given fiscal year. The specific objectives of these reports are wide and varied, including transparency and disclosure, accountability and governance, compliance with legal and regulatory standards, benchmarking and performance evaluation, investment decision-making, support for fiscal and tax oversight, and sustainability and social responsibility. Comparison of annual reporting requirements. The following compares the mandatory annual reporting requirements for listed, non-listed but reporting, and private corporations under the Philippine Securities and Exchange Commission, SEC, pursuant to the Securities Regulation Code, SRC, Rule 68, Philippine Financial Reporting Standards, PFRS, and the Revised Corporation Code, RCC. 1. Companies whose shares are listed in the Philippine Stock Exchange are required to file Form 17A and PSE Annual Report within 105 days after the fiscal year end. The comprehensive report shall include the sections as shown on the slide. Note that Management Discussion and Analysis, MD&A, is a required section and immediately precedes the audited financial statements. 2. Non-listed public companies reporting to the SEC are required to file Form 17A and submit it within 105 days after the fiscal year end. The content of the report, including the MD&A and audited FS, are of the same characteristics as with listed companies. 3. Ordinary private corporations that are not listed in the Philippine Stock Exchange, have no registered securities, and do not qualify as public companies, are required to file audited FS and the General Information Sheet, GIS. While the SEC does not prescribe a narrative annual report format for private, non-reporting companies, many organizations, especially large family or conglomerate-owned firms, voluntarily prepare an internal annual report for shareholders or banks. A typical private sector annual report includes the following sections as shown on the slide. Note again that the Management Discussion and Analysis section is present and precedes the audited FS. As we have seen, the MD&A is a significant portion of the annual report, whatever the type of the business organization is.
The strategic mandate, anatomy of the professional financial narrative. The production of a professional financial report transcends mere presentation of numerical statements. It requires the integration of a strategic, interpretative narrative designed to provide context, interpretation, and forward-looking analysis. The central framework for this narrative structure in high-stakes reporting is the management's discussion and analysis. The foundational role of the management's discussion and analysis. The MD&A is a critical disclosure component that supplements the raw financial data by summarizing the financials and relaying management's insights into the entity's performance. For publicly traded entities, MD&A disclosure is mandated under SEC SRC Rule 68, the PSE listing rules, and the Philippine Financial Reporting Standards (PFRS), and while private entities are not required to file it, many choose to include the MD&A for the enhanced clarity and context it offers to stakeholders. The creation of the MD&A is typically overseen by senior management, including the Chief Executive Officer, the Chief Financial Officer, and other financial heads, and requires review and approval by the Audit Committee or Board of Directors. This rigorous preparation process is necessary because the numerical presentation and accompanying notes often fail to convey adequate context for the quality of earnings or the reliability of past performance as an indicator of future results.
Primary objectives of the MD&A. 1. Management's perspective. The report must provide a narrative explanation that enables investors and regulators to view the company through the eyes of management. This required perspective means the narrative carries management's thoughts and opinions, though it is typically not subjected to the formal audit procedures applied to the core financial statements. Generalized or boilerplate narratives are inherently deficient as they fail to provide this necessary management context and specific insight. 2. Contextual enhancement. The narrative must enhance the overall financial disclosure by providing the operational, economic, and strategic context within which the numerical data should be analyzed. 3. Future performance assessment. The discussion must provide information regarding the quality and potential variability of the entity's earnings and cash flow, allowing stakeholders to ascertain the likelihood that past performance trends are indicative of future performance. An MD&A prepared to professional standards must be quantitative and qualitative, complete, reliable, and relevant. Regulatory bodies further stipulate that the narrative must be a streamlined narrative that is balanced, integrated, and concise, ensuring that the complex information is digestible without sacrificing detail. The role of prospective orientation in risk communication. The mandate to discuss the quality of earnings and the likelihood of future performance elevates the MD&A beyond a mere historical summary. It requires explicit attention to prospective orientation. The narrative must identify known trends, events, or uncertainties that are reasonably likely to have a favorable or unfavorable impact on premiums, net income, or surplus. This focus on prospective events transforms the narrative into a critical risk mitigation document. If management is aware of material circumstances that could affect future operations, liquidity, or financial condition, these must be disclosed, even if they have not yet manifested financially in the reporting period. The failure to adequately address known uncertainties is not merely a formatting error, but a significant gap in governance and investor communication. Therefore, the structure of the MD&A in the Word document must physically segment and isolate these forward-looking statements from the historical results to ensure their thoroughness and clarity. Core components of narrative disclosure. To achieve the required rigor, the MD&A narrative must integrate several distinct components, each serving a specific reporting function. Structuring the Word document using major sections for each component ensures that all mandated topics are comprehensively covered. Executive Overview and Outlook. Although this section is technically optional, nearly all professional entities include an executive overview, as it serves to set the strategic context. Management uses this section to discuss the big picture, including the company's financial objectives, recent successes and weaknesses, principal risks, and opportunities for future growth. This section establishes the high-level framework for interpreting the subsequent numerical analysis. Results of operations. This is the interpretive core of the report, where management summarizes the financial results for the year and interprets the numbers from the statements. The discussion must move beyond simple year-over-year variances to describe the underlying events and conditions that drove the change. Key requirements include unusual events, identifying the extent to which unusual, infrequent, or significant economic changes impacted income or surplus. Material changes, quantifying and identifying the factors contributing to material changes in individual financial statement line items compared to the prior year or expected amounts. Premium volume analysis. If the financial statements show a change in premium volume, the narrative must detail whether the change is attributable to shifts in volume of premium written, adjustments in pricing, or modifications to the product mix. Liquidity, asset-liability matching, and capital resources. A detailed discussion of liquidity is mandatory, focusing on the entity's ability to generate adequate cash to meet its short-term, up to 12 months, and long-term, beyond 12 months, cash needs. The report must identify specific balance sheet, income statement, or cash flow items that management believes are indicators of the entity's liquidity position. The detailed discussion requires coverage of known uncertainty, impact, any known trends, demands, commitments, events, or uncertainties that are reasonably likely to result in material changes in liquidity. If decreases in liquidity are identified, the MD&A must describe the remedial course of action being taken by management. Capital availability, analysis of internal and external sources of capital, material unused liquid assets, and trends in capital resources. This includes discussing changes in the mix or relative cost of capital sources, such as equity, debt, and any off-balance sheet financing arrangements.
Critical accounting estimates and reserves. The MD&A must provide an explanation of the accounting policies used, disclosing whether the financial statements were prepared using Generally Accepted Accounting Principles GAAP or International Financial Reporting Standards IFRS. Additionally, the narrative must discuss the effects of any critical accounting policies, the judgments made in their application, and the impact that changes in assumptions or conditions might have on reported results. For insurers or entities with significant contingent liabilities, the MD&A must specifically address loss reserves, describing any risks that affect their volatility and discussing any changes in reserving practices. The structured breakdown of these components reinforces narrative quality by requiring separate sections for historical performance, forward-looking prospects, and liquidity assessments. The structure prevents management from substituting generalized commentary for the required detailed explanations, thereby ensuring the report meets the high standard of disclosure demanded by regulators. Prospective orientation. As mentioned earlier, management must disclose material circumstances that could influence future operations, liquidity, or financial condition, even if its financial effects have not yet appeared within the reporting period. Failing to properly address known uncertainties is a serious lapse in governance and transparency to investors. Accordingly, the MD&A section in the Word document should clearly separate and highlight these forward-looking statements from the historical results to promote completeness and clarity. Crafting the story. Principles of data-driven financial storytelling. A financial report that merely contains compliance data is insufficient. It must be transformed into a narrative that is both engaging and informative. Financial storytelling involves interpreting complex financial metrics to highlight their significance within a broader business context, making the information accessible to all stakeholders, regardless of their financial background. The following principles, and at the same time, steps should be meticulously followed. Structuring the narrative arc. The effectiveness of financial reporting relies on integrating data with a compelling narrative and appropriate visual elements. The narrative must be constructed using proven storytelling techniques to avoid the critical pitfall of presenting numbers without context, often leaving readers asking, "So what?" The audience-centric approach. The first step in crafting the story is to identify the audience, whether they are senior executives, peers, or non-finance professionals. The report content and level of detail must be tailored to the acumen of the audience. For instance, highly complex methodologies should be translated into bite-sized pieces to ensure they are digestible. Understanding the recipient dictates what key information must be prioritized and ensures the data remains relevant and engaging. Implementing the pyramid structure. For reports focused on driving decisions or showcasing key trends, a pyramid structure offers maximum impact by prioritizing key information at the outset. This structure dictates the flow of the document and should be meticulously mapped to the report's hierarchical structure in MS Word. The powerful 5-step structure for data visualization stories is 1. Setting the stage, establishing the context and introducing the key players. 2. Presenting the problem, defining the central challenge, tension, or risk the company faces. 3. Showcasing the data, presenting the specific financial evidence and figures that support the message. 4. Highlighting key insights, analyzing the data to answer the "so what" question, emphasizing vital takeaways. 5. Offering a conclusion or recommendation, summarizing the main points and providing a clear call to action, or CTA, for the audience. By organizing the narrative using this structure, the document naturally links financial performance to strategic goals, explaining the rationale behind key management decisions and outlining future priorities. Design and readability, applying financial visualization standards. Design elements in financial reports are not merely aesthetic. They are functional requirements that foster transparency, strengthen investor confidence, and ensure accurate interpretation. Accuracy and clarity must remain paramount. Typography standards for comprehension. The chosen typography directly influences number readability and hierarchical comprehension. It is recommended to use simple, clean fonts to maximize readability. For documents intended primarily for print, such as final annual reports, serif fonts, for example. Times New Roman are traditionally more legible for lengthy paragraphs of text. Conversely, for digital reports displayed on monitors or projection screens, sans serif fonts, for example, Arial, are often preferred for easier reading. Consistency is key. Practitioners should limit the document to 1 or 2 fonts, using bold, italics, or underlining to denote emphasis, rather than switching between multiple typefaces. Color coding and conventions. Color coding must be both consistent and meaningful throughout the report. Color carries significant psychological and conventional weight in finance. In the U.S., red conventionally signals negative variances, losses, or problems, while green signals positive performance and growth. To maintain professional credibility, conservative color palettes consisting of navy blues, deep grays, and muted tones should be used, conveying stability and trustworthiness. A crucial requirement for professional reporting is accessibility. Reliance solely on color to communicate positive or negative results introduces severe risks for colorblind users, or when the report is printed in black and white. Therefore, professional design standards mandate the use of patterns, textures, or explicit labels alongside color coding to ensure that interpretation remains accurate regardless of the viewing conditions. Poor color contrast in detailed charts can render critical information unreadable, demanding high contrast ratios for all text and graphical elements. numerical formatting, and data table readability. The presentation of numerical data in tables requires strict adherence to professional formatting standards to optimize scanning efficiency and comparison. Alignment. All numbers, percentages, and currencies must be right-aligned. This standard practice allows users to quickly and accurately compare magnitudes across rows. Rounding and decimals. For improved legibility, peso amounts should typically be rounded to the nearest peso, as extreme precision down to the cent is rarely necessary for the reader. If decimals are used, for example, in percentages, the number of decimal places should be minimal, for example, 1 decimal place, and applied consistently throughout the document. Integrating visuals for optimal flow. Visual data such as charts, graphs, and tables are indispensable tools for financial storytelling. They should be selected carefully, for example, line graphs for time trends, bar charts for categorical comparisons, tree maps for balance sheet proportions to ensure they effectively support the narrative claims and add new meaning to the content. To maintain optimal narrative flow in MS Word, charts and tables must be placed immediately following their reference in the text, maximizing proximity between the commentary and the evidence. Controlling table and chart placement. When complex graphics or shapes are used, MS Word's text wrapping features can sometimes be unstable. A crucial technical step for maintaining stability is to first insert a drawing canvas found under the Insert tab. Shapes menu. Table formatting for flow. For detailed financial tables in Word, specific formatting controls are vital for readability. Controlling row breaks. To prevent awkward page breaks that disrupt the flow of data, particularly when a single row breaks across 2 pages. The table properties dialog must be used to ensure rows are not permitted to split across pages. Repeating row headers. If a financial table spans multiple pages, the table header row must be set to repeat automatically on subsequent pages. This feature ensures that the reader can identify the content of each column without having to refer back to the previous page. These meticulous formatting rules are essential because sloppy reporting, such as using inconsistent alignment or rounding, contributes to misinterpretation by stakeholders, increasing skepticism, and potentially diminishing analyst coverage. The consistent use of MS Word styles and themes, in the next section, is directly correlated with fostering this necessary visual clarity and structural transparency.
Architecting the report in MS Word. Advanced document engineering. To transition from strategic planning to document creation requires the meticulous application of MS Word structural features. A professional financial report relies on a robust underlying architecture managed by styles, themes, and section breaks to ensure consistency and stability across hundreds of pages of complex content. Establishing the report foundation, templates, themes, and styles. A high-quality document must maintain consistent formatting throughout. This consistency is achieved not through manual formatting but through the disciplined use of Word's automated features. Utilizing templates, pre-designed Microsoft Word templates for annual or financial reports can expedite the initial setup by providing placeholder text and basic formatting. The use of custom templates streamlines the workflow, enhances report readability, and significantly reduces the time spent on formatting. However, since a formal financial report requires a clean, conservative, data-driven look, the selection of templates must prioritize functionality over flashy aesthetics, often requiring heavy customization, default colors, and fonts to align with conservative financial standards. Defining themes and styles. Themes allow for the quick application of a consistent look and feel. A coordinated set of colors and fonts across the entire document, which is critical for maintaining corporate branding. However, the most effective tools for managing text formatting are word styles. Heading styles H1, H2, H3, etc. These are fundamental to the report structure. Applying heading styles to all titles and subtitles defines the hierarchical organization of the document and enables the automatic generation of an accurate table of contents. Paragraph styles, customizing base styles, like normal, to enforce correct typography, for example. Font choice, size, spacing, indentation ensures consistency across the narrative paragraphs. Caption styles. A specific style must be defined and applied to all captions for figures, tables, and charts. This dedicated style, coupled with the built-in caption numbering feature, allows for the automated creation of a list of figures and a list of tables. The consistent application of styles minimizes manual errors and allows the document to function more like a database manager, automatically maintaining navigation tables. This structured approach significantly increases the document's stability and quality, mitigating the risks associated with inconsistent or erroneous quality checks during the review process. The power of section breaks, controlling layout and pagination. Section breaks are the technical partitioning tool that separates a single Word document into multiple, independently formatted mini-documents. They are essential for achieving the complex formatting required in professional reports, particularly on multiple pagination schemes, varying headers, footers, or localized layout changes like columns are needed. Types of section breaks and application. Word offers several types of section breaks, each serving a specific structural purpose. 1. Next page. This is the most common break for isolating major sequential components, such as separating the executive summary from the main MD&A body, ensuring each section starts on a new page and can have unique formatting. Odd page. Even page. These breaks force the subsequent section to begin on the next odd-numbered right-hand or even-numbered page, a necessary convention for adherence to formal print publication standards for chapters or major reports. 3. Continuous. This break starts the new section on the same page and is used exclusively for applying localized formatting changes without advancing to the next page. For example, inserting a continuous break before and after a key metrif sidebar allows the text block to be formatted into two columns while the surrounding narrative remains in a single column. The correct use of these breaks is the prerequisite for stable formatting. Without them, formatting changes, like inserting a new header on page 5, would automatically replicate across the entire document, leading to structural failures and duplication of content or incorrect page numbering. Implementing complex pagination schemes. A professional report often requires different page numbering formats for preliminary pages such as the title page, table of contents, and the main bodies such as the MD&A and the financial statements. Achieving this non-linear pagination requires a three-step technical process managed by section breaks. 1. Define sections. Insert a next page section break immediately following the last page of the preliminary content, for example, after the table of contents, to create two distinct document sections, Section 1, Preliminary, and Section 2, Main Body. 2. Break the link. Access the header or footer of the second section, Section 2. Crucially, the link to previous or same as previous button checkbox must be disabled. This action physically decouples a formatting of Section 2 from Section 1, allowing them to accept independent pagination styles. 3. Format and insert. Insert page numbers into Section 1, formatting them using Roman numerals. Then, insert page numbers into Section 2, formatting them using Arabic numerals, and ensuring the settings start at 1 is selected in the page number format dialog. This independent formatting allows the document to maintain industry standards for archival and citation purposes.
Seamless data integration, linking Excel visualizations, and maintaining accuracy. In high-stakes financial reporting, the dynamism of the data is a critical concern. As figures are often updated late in the reporting cycle, the professional standard requires that charts and tables derived from external sources, particularly Excel, maintain a dynamic link to the source data to ensure that the report reflects the absolute latest information. Linking versus embedding, choosing the right connection. 2 primary methods exist for incorporating external data visualizations, but only one is recommended for production-grade financial reports. Link data, the recommended method. This method establishes a dynamic connection between the Word document and the external Excel source file, This is the professional standard because financial data is subject to continuous forecasting and frequent revisions. Mechanism in Word. The user utilizes the Paste Special command and selects options such as Microsoft Excel chart, linked data, or Microsoft Excel worksheet object. Advantage: if the data in the source Excel spreadsheet changes, for example, during final auto reconciliation, the chart or table in the Word document can be automatically refreshed, ensuring accuracy and mitigating the window of error. Embedded data. This method embeds a copy of the Excel workbook within the Word document. While the data can be edited via Word's chart tools, the embedded chart does not maintain a link to the original external workbook. This separation poses a significant version control risk. If the source data is updated, the embedded chart in Word must be manually updated, leading to potential discrepancies and inconsistent reporting. Step-by-step guide to dynamic chart integration. To successfully integrate a dynamic visual from Excel into Word, the following precise steps should be followed. 1. Preparation in Excel. Finalize the chart or table in the source Excel file, ensuring adherence to professional formatting rules such as right-aligned numbers, accessible color coding, proper access labels. 2. Copy and select Paste Special. In Excel, select the chart or table and use the copy command. In the Word document, navigate to the desired insertion point instead of a simple paste. Click the arrow beneath the Paste button on the Home tab, then select Paste Special. 3. Establish the link. In the Paste Special dialog box, select the Paste Link Radio button, then choose the appropriate object type, such as Microsoft Excel chart, linked data, or Microsoft Excel worksheet object. Clicking OK inserts the visual and establishes a necessary dynamic connection. 4. Updating data. Linked data fields do not update in real time. If the source Excel file is modified, the visual in Word must be refreshed. This is achieved by selecting the chart, navigating to the Chart Design tab in the Word ribbon, and selecting the Refresh Data command. For linked charts, the source data can be edited directly by selecting Edit Data in Excel from the same tab. The mandatory workflow for report finalization must include the explicit step of updating all fields, just prior to distribution or printing. Since linked charts and cross-references update upon printing or manual field update, this final check ensures that the published document contains the absolute latest financial data. Captioning and cross-referencing for navigation. Once a visual is placed, it must be properly labeled to integrate seamlessly into the document structure. Applying captions. Every figure and table requires a formal caption. For example, Table 1.1, Consolidated Cash Flow Summary. Captions should be applied using Word's built-in caption feature. In the References tab, which automatically sequences the numbering, the consistent use of the defined caption style allows Word to generate the list of figures and list of tables automatically. Internal references. Narrative text often refers directly to supporting visuals, for example, as shown in figure 4.2, instead of typing the reference number manually. The cross-reference function in the References tab must be used. This function links the text reference directly to the corresponding caption, ensuring that if the chart numbering changes, for example, due to insertion of a new chart earlier in the document, the narrative reference updates automatically upon manual field update or printing.
Finalizing and compliance, presentation standards and review. The final stage of report preparation involves rigorous quality control to ensure not only aesthetic consistency, but also mandated compliance and full disclosure. Ensuring MD&A compliance and disclosure quality. Addressing narrative deficiencies, the document should be reviewed to eliminate instances of boilerplate language, or narrative that simply recounts account balances without providing genuine management, insight, or explanation. The text must successfully transition from presenting numbers to providing context, thereby avoiding the analytical failure of not explaining the so what behind the figures. Balanced reporting. The MD&A requires a balanced discussion that openly reports on challenges, risks, and weaknesses. The bad news, alongside successes and opportunities. The good news. The discussion must tie financial outcomes directly back to the execution of business strategy, explaining the rationale for key decisions and what those decisions imply for the future. Technical compliance. A checklist review must confirm that all required MD&A elements are covered, including the detailed discussions on short and long-term liquidity, capital resources, and the disclosure of all known trends or uncertainties reasonably likely to impact future results. Any non-GAAP financial measures must be clearly disclosed and contextualized. Finalizing the document architecture. Prior to printing or conversion to archival formats, the document's automated structures must be finalized. Automated table generation. The final table of contents, list of figures, and list of tables must be generated using the fields created by the heading styles and caption styles. It is essential to confirm that these tables accurately reflect the implemented pagination scheme, correctly displaying preliminary pages with Roman numerals and the main body with Arabic numerals. Source, citation. All data used in the narrative or visuals must be traceable. External financial data and specific internal reports must be properly cited using an established referencing style. For example, the APA 7th edition. The citation must include the authorizing organization, the year of publication, and the title of the data source. In the narrative text, an abbreviated citation, that is, author and/or organization, year, must follow any claim derived from the source. Distribution and accessibility standards. The final report design must account for diverse reading, media, and audience requirements. Accessibility mandates. A professional report must be accessible to all users. This extends beyond sufficient text contrast to accommodating colorblindness. Since conventional color coding, like red and green, may fail, robust design dictates using supplemental methods like patterns, textures, or specific text labels alongside color to differentiate positive and negative variances. This ensures that interpretation remains accurate, even when the document is printed in black and white. Retention and templates. The document must be designed using flexible templates that can accommodate various presentation standards, particularly when dealing with international regulatory requirements. Furthermore, the final report must comply with required record retention standards, ensuring that its format remains accessible and accurate for the designated period.
In summary, the creation of a professional financial report with integrated narrative in MS Word is a rigorous exercise that necessitates the application of advanced technical document architecture and strict adherence to strategic communication standards defined by management discussion and analysis principles. The quality of the final report is fundamentally linked to the underlying technical structure. The following actionable recommendations derived from these professional standards are essential for practitioners. 1. Prioritize structural stability. The consistent application of MS Word styles such as heading, caption, and paragraph styles, and the strategic use of section breaks are not stylistic choices, but non-negotiable prerequisites for document stability. Failure to use section breaks to isolate independent formatting elements such as headers, footers, and pagination increases the risk of systemic formatting failures and inaccurate numbering in high-volume reports. 2. Mandate dynamic data integration. Static charts and embedded data carry an unacceptably high risk of misrepresentation, particularly in the context of continuous financial reporting and prospective analysis. The professional standard requires dynamically linked data using paste link to ensure accuracy and facilitate rapid updates during critical reporting windows. The final professional workflow must include the mandatory step of updating all fields, such as linked charts and cross-references, before distribution. 3. Translate complexity into clarity. The MD&A narrative must function as a translator, breaking down complex data into digestible segments appropriate for the audience's acumen. Design elements, conservative color palettes, right-aligned numerical typography, and accessibility features such as patterns, labels, instead of reliance on color alone, must be viewed as functional requirements that enhance transparency and reduce the potential for stakeholder misinterpretation. 4. Embrace the forward-looking mandate. The MD&A's most strategic function is to serve as a risk assessment tool. The report architecture must ensure thorough, dedicated sections are provided for the discussion of known prospective trends and uncertainties regarding liquidity and capital resources, thereby transforming the report from a mere historical ledger into a vital governance and forecasting instrument. There it is, Chapter 4. Designing and creating financial reports using MS Word with the theme, a technical guide to producing professional financial reports with integrated narrative in MS Word. Listed on the slide are the references used in the production of this lecture video. Thank you for watching and stay safe, always.